Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune, and I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. Really appreciate the support. Thank you so much for all of the wonderful comments in the YouTube comments below the video and all the support and feedback I've received through Twitter. It's really wonderful to see. It's such an awesome community, the uranium investing community. Thank you. I can't tell you enough how much I appreciate all the support. If this is the first episode you've watched, please like the video and subscribe to our channel. Turn on notifications. You'll get updates whenever we publish a new video, which is almost every day. To cover a little bit of housekeeping again, nothing in this video is intended to be investment advice. I am not a financial advisor, and this is not financial advice. Please always do your own due diligence when investing, and please take responsibility for your own actions. With that said, let's jump right into the daily scoreboard here. So the spot price of uranium today, $50.25, down 50 cents from yesterday, slightly ticking down since Sprott has been mostly out of the market. They purchased 600,000 pounds on Friday, but this is day two of no pounds purchased, I believe, although we'll find out by the end of the day. But considering that they're probably right about at NAV, they likely didn't issue shares and buy pounds today, but we'll see. Yesterday, Sprott took in, the Sprott Physical Uranium Trust took in no new capital, and they purchased no pounds. So this is only the second day since the launch of the ATM that they had no action in the markets whatsoever in terms of issuing shares, raising capital, or purchasing pounds. That was yesterday, Monday, the 20th. Let's look at the ETFs now, the flywheel effect, as we call it. The flows that come into the ETFs, go out of the ETFs, obviously creates kind of its own flywheel in that they have mandated purchasing and selling of the underlying holdings. URA reporting this morning, they had not received any redemptions over the violent two-day sell-off from Friday and Monday. We believe this is not correct, and this is simply a lag in their reporting from the inflows and outflows. It's likely that they report tomorrow that there will be some substantial outflows, as we likely see, on a day-to-day basis following these outflows, some selling pressure on the stocks. And today, most of the stocks in the space were mostly flat, and a lot of them were up, and then we see some selling towards the end of the day. Typically, these ETFs, especially URA, are pretty sloppy buyers and sellers. Sometimes, for whatever reason, they'll wait until the last 30 minutes, the last 20 minutes, the last 10 minutes of trading, and just market buy or market sell. And I think that that's what happened today, as we saw some volumes come in the last 30 minutes of trading. URNM reported 300,000 shares of new redemptions, which equates to 25 million of mandated selling. So yeah, this works both ways, folks. And we always watch this because it leads to what we can expect, knowing that a big selling day in the ETFs will likely lead to more selling of their underlying holdings in the following days. And that's exactly what we've seen, exactly what we expected, and exactly what we discussed in previous episodes of the Uranium Market Minute. Because of this sharp sell-off, the AUMs of both URA and URNM fell on Friday and yesterday. URA now has an AUM, that's assets under management, of 964 million, URNM 677 million, 1.64 billion together, represents a drop of about 250 million since last Thursday. Not insignificant. It's pretty big selling volume on Friday and Monday. However, it looks to be stabilizing a bit today. Starting off with U.UN, Sprott Physical Uranium Trust. Looks like it opened up today and then sold off a bit throughout the day, ending slightly down on the day. Some much smaller volume than we saw the previous week. Continued weakness here, and we don't really know what's happening here, other than I believe what is happening is there could be some smart money trying to influence the space and cool things off a bit, considering the torrid action that we saw in the second half of August and the first half of this month. So a little bit of a rest. The chart actually looks pretty darn good, all things considered, holding up quite well. We are right about at NAV, trading at NAV. I explained this thoroughly in episode 6 of the Uranium Market Minute that I recorded yesterday. If you like a better description of what that means when Sprott is trading at a premium or a discount to NAV, please go listen to that episode. Let's check out the ETFs here. URA. opened up and then sold off a bit, but closed positive for the day, riding just above that 20-day moving average, sitting above support, sitting kind of right at the previous resistance from the highs in June. Let's see where we're at here. Yeah, this is looking like we've seen a little bit of support. Volume tapered off a little bit here. MACD still looking like it's printing that bearish cross. RSI ticking up a little bit today, right in the mid-range there. Not a bad looking chart, kind of bouncing right off that that 20-day moving average and previous resistance. So all things considered, besides the big sell-off on Friday, looking like we're seeing a little bit of maybe a dead cat bounce here, but it's the chart does not look terrible in my opinion. URNM, pretty similar, actually looking a little bit better. Didn't even make it down to that 20-day. Opened up, sold off a bit, but still closed in the positive for the day. Let's take a look at a couple of the large caps here. Cameco also sitting right on that 20-day. Again, opened up, sold off throughout the day and closed in the negative. Not great. Honestly, I believe that a lot of that had to do with ETF selling. And I think that retail is sort of mostly on the sidelines here, waiting for either the big money to come back into the space or Sprott to continue buying pounds in the spot market, issuing shares. So let's go ahead and look at, let's take a look at the mailbag and see if there's any questions here I can jump into. Justin, why is it difficult to hold on in a young bull market? Gosh, that's a complicated answer, actually. There's a lot really I can say about this, but I'll try to keep it short and sweet. It's difficult to hold on because well, first of all, in a resource bull market, the volatility is off the charts. And in a young bull market, what happens is there's a lot of renewed interest that comes into the space, just right off the bottom of the lows of the bear market. So for us, that was in December, or you could probably say March of last year, but really the sector didn't take off until December through June. And we saw really a lot of increased attention come into the uranium space, big moves in the equities, and a lot of newcomers, a lot of tourists come into the space trying to chase the hot sector, and late money always comes in, trying to FOMO into a trade that they don't know a lot about. And it's often that this late money and this tourist money gets shaken out by the volatility. This is something that happens over and over and over and over in the resource space, and it's to be expected. And we just saw it again last week and into Monday. Another reason why it's so volatile is that investors try to trade around, or I should say traders try to trade around these stocks. And a lot of times what happens is you might enter a position based on a perceived expectation of what the market should be doing from your understanding of the fundamentals. And the markets are discounting mechanisms, and the stocks will always trade based on a future expectation. One example I'm going to give you of this is in August. Okay, August 17th is when Sprott's ATM went live. Immediately that day, they issued shares and started buying pounds, and we saw the spot price start to move. What happened? The equities sold off. The next day, more shares issued, more spot market pounds purchased. The spot price continued to move up. What happened? The equities sold off. Because some of the speculative money in the space entered on this theory that Sprott would immediately be buying, which they did, and the spot price would immediately be moving, which it did, would in turn move the equities instantaneously. I can't tell you how many frustrated traders I was witnessing on Twitter saying, the whole thesis is dead. This isn't happening. I give up. 2 days into it. You have to be more patient with these things. And you have to understand that the smart money that really moves the sectors doesn't always come in on your expected timelines. Another example of that is December of 2020, when all of this money came into the space, primarily driven by institutional newsletters that were stating the case of the profound investment opportunity in uranium, the seasonality, ESG factor, just a play of energy, how uranium had underperformed other energy plays. But the spot price hadn't moved. So there were a lot of retail investors on the sidelines just saying, hey, what gives? We've been watching the spot price, it's dead in the water, but all this money's coming in. You have to follow the fund flows. And so what we're seeing now is reduced volume selling, which is, in my opinion, a positive. And the sentiment always has to get shakeout when the fundamentals, even when the fundamentals are strong, you always have to have a technical shakeout, and that's what we're seeing. So um, it's the most difficult thing about hanging on in a resource bull market is having the conviction to understand and deeply believe in what you've invested in. Investing is like rock climbing. When you get into it, you got to know how to get out. I used to climb a lot actually, and I've actually been on climbs where I didn't know the down climb. I didn't know if there were hooks at the top to rappel off of, or if there's an easy down climb. Climbed up late in the day, not knowing how to get down, created a situation, ended up having to rappel off of gear that I left in the rock, hundreds of dollars of gear that I just left there for the next climber to grab. I didn't know how to climb down, and that was stupid. If you don't know why you're getting in, you're not going to know why to get out. So if you're new to the sector, it's important that you do the due diligence that will give you the conviction to hold on through the volatility, because the volatility we've seen in the past 6 weeks or so, the upside and the downside, is just a taste, man. This is going to get wild. And if you want to hang on for it, you got to understand that. And, soft pitch, that's what we do with this newsletter is we dig into the sector deeply, and we distill down all of the moving parts that are oftentimes difficult to understand into what it means to you as an investor. And so to understand the sector is of primary importance. And that is what will give you the strength to hang on through the volatility. All right. Cheers, everybody. With that, if you want more information on our newsletter, click the link below. If you'd like to receive a sample newsletter, please send us an email, support@uraniuminsider.com. We will send you a sample newsletter from the previous month. Hang in there, folks. Things are setting up technically here. We're going to see a little bit of, it's going to take a little time to repair this chart damage, but in my opinion, things are looking positive. So hang on. We'll see you tomorrow. Cheers.